You know, it's time to go live. Okay, so can anyone confirm that the quality is alright, at least? In the chat? The quality is alright, at least. In the chat? So now I just wait for some more people to tune in. The quality is alright. Just wait a few more minutes, like 3 or 4, and I'll be starting. So just as an overview, I'll be commenting first on the low volatility we're seeing currently, and then I'll be going over FOMC and macro, although I'm not an expert. I'm just going to give my own points of view. Then I'll be looking at order flow, which you're seeing on screen right now. And at the end of the stream, I'll be going over some high time frame TA, even though I don't do TA anymore. Just a few things I've plotted on a chart randomly. So yeah, we have 3 people watching right now. You know, you can talk in the chat, do something. So if you don't follow me on Twitter, just follow me. If you are subscribed, subscribe as well. And we should be starting really soon. Okay, so we still 3 people here. To be honest, I expect it to last like 30-40 minutes, but we'll see. Like, it's my first stream ever in the end, so I would appreciate some feedback, some whatever. So I think it's about time to start, and we'll go to the BTC IV chart, which is the implied volatility. We use this metric a lot for options, and as you see, it's been like down only since since November, since the FTX collapse. It all changed. We had a spike in implied volatility, and since then we went down all the way to December, which if you remember December, it was like this this insane chop right here. I lived this. I was online all day during this time, and it wasn't really it wasn't really good to trade on. And it looks now we are in the same situation almost. We are at 43% implied volatility. 45 now with this recent spike, but we were at below 43, which is kind of concerning. And as you see here, like, we spiked on the move up, we spiked on the second move up more than we did in the first move up, even though like the price movement was smaller, not really smaller. It was like Friday, March the 10th. Yeah, it was not smaller. Okay. It was almost the same magnitude, if not more. We went from 20 to 28, and here we went from 16 to 23, which is... And remember, implied volatility is not the same as historical volatility. So implied volatility is what the market prices in for future volatility. So we went up practically the same, 44%. And IV went up more on the first leg up, than on the second leg up. That's just because after the first leg up, there was way more optimism in the market, I think. And after the second leg up, if you remember well, this was the USDC peg when it went to like 90 cents. And, the comeback was quite insane with Silicon Valley Bank, Credit Suisse going bankrupt all of a sudden. So I think there was more optimism here than here, and I think that's what that's one reason that led us to stagnate for a while here. And the second one would be, if you look at options flow, you have a lot of... This is the June 30th expiry, which is, if you look at OI, this is the strike that has the most of OI, because it's a monthly expiry, and it's like the next one. So if you look on here in the OI by strike price, you see there's a lot of calls bought here at 30K. If you don't know what a call is, it's basically a bet that price would be above 30K by June the 30th. So if price is above 30K by that date, this call will be in the money, and it will make money. And if price is below 30K, by the time of the expiry, it just expires worthless. You lose all your money, just like sports betting, I guess. Except you make the more money. You make more money if it's price higher. It's not fixed win to fixed loss. It's fixed loss and potential infinite win in the case of calls, not in the case of puts, because price can go lower than zero. So for calls here, we have a lot of OI at 30K. That means if price is above 30K, all these guys are winning. And it has been like this for a while. I have been looking at OI by strike, I think since December last year, and it's been at 30K. There's been high volume of call OI. There's more at 35K now, but I would just ignore that for the time being. 30K was a target. 30K was also the level we stopped at. It was 31. I doubt we got any big expiries. If you see, like, the top is on the April the 14th, and by April the 20th we're already below 30K. So basically no calls at 30K, or almost no calls at 30K expired in the money. So I think that was one of the main drivers of resistance here. And then we got just boring conditions, no one doing anything. Also, people buying shitcoins of all kinds. That was also one of the reasons we topped the 30K, in my opinion. Just seeing people buy, Pepe and whatever else, like sending money to ban.eth. I don't even know. Like it's not my field of knowledge in the end. So yeah, I think that was a reasonably fairly priced up. Now sitting at 26.5 is quite nice. And I had expected volatility to go higher, like to not be like just a spike on this, but I guess we have had bigger moves, and IV didn't really respond as well to them. And again, IV is not HV or historical volatility. IV is just what the market price is in for volatility. If I'm wrong on any of this, just please correct me. Like, 4 people watching, nice. Okay, so I think these are my current opinions on the market, on why we topped. Basically, those 30k cold wall, people buying shitcoins, and the fact that we went up based on news, based on hype. It was less hype. Better said, it was less hype. From IV going up, it was less hype than on the first run up. So we had less hype here than here. Less hype here than here. So these are my main reasons of why the market topped to 30k, and we just staying pretty stagnant. Also, we haven't had any special macro conditions ever since. We had banks failing here, but we didn't have any banks failing. We didn't have any news, although we did have the debt ceiling, but that's one of those things that only doomers talk about, because in the end, like, I don't think anyone wants or desires the US collapse unless you're ultra mega bearish. So politicians definitely don't want the US to collapse and to default on its debt. So I'd say the debt ceiling is not as relevant as it could seem. They were gonna agree anyway in the Congress to raise the debt ceiling. That's my own opinion on the debt ceiling topic. Not an expert again. So yeah, just talking about the debt ceiling, I think it's time to talk about macro, to talk about the FOMC. Again, I'm not an expert. I'm just giving basic opinions. Like, you have way better people to watch macro from. So we're gonna go to the amazing CME Watcher website, Fed Watch tool, and we have an FOMC coming up on next Wednesday. So it's on Wednesdays, by the way. Coming up also, we have CPI on Tuesday and PPI on Wednesday. So we have CPI one day before FOMC. So yeah, if you look here, you have currently 68% of no hike and 32% of hike. That would be, which is 525, 550. But this has changed over time, and I have watched it change. I don't know the exact reasons, but it was like 50-50 at some point, and just after the May FOMC was like 91.8. This was when I wrote a thread about my opinions, and it was like in early May the 6th. Yep. Now it's been changing, and the market now definitely prices in some hikes. It didn't price in hikes back then on May the 6th. Right now for July, ladies and gentlemen, we have 65% of a hike. So I guess what market kind of expects is to slow down hikes, just hiking 20. It's just a high 25 every 2 meetings. So just do the first pause and then hike, because inflation seems to not be low enough still, or whatever. Just, I don't know what are the metrics behind, what are the indicators that say that we should keep hiking. Like, I have no idea. I haven't done research on that one. I'm just looking like a pleb, these CME hikes. So it just seems that they want to slow down more, but they don't want to pause completely. Now, if I remember correctly, on September the 20th, FOMC, we had like 90% of fees. We have 4.1 now. Just insane, how pricing has changed over time. That, you know, I think that may also be a reason why you are not a 30K anymore. Just got that, we got tired conditions overall, while people are buying shitcoins. That's what I like to say. And I don't want to seem like the man who just talks about yesterday's weather either. So I will talk about the future as well. Just doing some quick review. If we wanted to look at inflation month over month to see any indicators, we got in April, like the May release, we got 0.4. I guess that was one of the reasons why the pricing changed. And by the way, I like trading economics more than any other website. Just simple UI and overall just a nice way to put most of the metrics. If you look at, for example, jobs reports, we don't have those. You have to search those. Okay, jolts, or just non-farm payrolls. So non-farm payrolls went up, which is literally the amount of jobs that are created. You have higher inflation, more jobs, I guess. That was a bit of the secret recipe. So I think we're done with this. And now I'll review orderflow for a bit, which is what maybe you came here, because orderflow is my main content. And first off, I see spots TWAPing sales here. TWAPing is like time weighted average price, so just selling X coins every X time. Just that drives CVD down. And TWAPing is done for market making purposes. Like, do not confuse that with DCA. Like, TWAPing is selling or buying over a short period of time, like buy every 5 minutes. As opposed to DCA would be like buy every 1 month, or buy every a longer period of time. This will be just for a market maker to get their order filled. So yeah, just seeing spot TWAPing sales here. I do not like that if I was too long. So I would be short in this environment. So I stopped giving yesterday's weather. And then future is kind of flat, so is OI. Just overall boring day with this spot selling here. So again, I would want to be short, especially since what happened yesterday. Spot was selling the entire day, like the entire session. Then I guess that was futures. Nothing too special to see here. OI was also down. So we just see here that it's mostly some shorts opening, but longs are easily getting triggered one after the other. So shorts don't really have to do the work, and that's why we stay stagnant here. Shorts didn't have to do the work, so they don't do the work anymore, and longs don't get liquidated anymore. So I guess if we were to go down, I would just see OI start grinding up whilst both CVDs are down, and price gets down until we find some level of liquidations. That's usually the formula when like one side is winning. OI just starts going up. CVD just starts going on one side or the other. Let's talk about going down, and then price goes down as well as a result of CVD, or CVD goes down as a result of price. You know. But another detail about CVD that not many people tell you is that it counts market orders, because market orders are the one which move the price. Limit orders do nothing; they just get filled. But in the end, price moves when there are more market orders buying than limit orders selling. So, price goes to the next, just takes the next one. Like, I don't know if you understand me on this one, but if there are more market orders at 26.4, then limit sells, like price will go and fill the next sells at 26.5, and then price will go up. So CVD just represents the aggressive side, the passive one. And yeah. And will almost always just make a confluence with price, although not always, because for example spot here is going down while price is not. So these are the kind of things you want to look at. You want to look at the divergences between spot, CVD, and price. It's a almost never fade spot divergence like this. I would say definitely too short. And I have a thread in my pinned tweet. I have a thread about OI and CVD. I also have a video. It's probably the most popular thread I have. 221 likes. I clearly say here to not fade spot, CVD going down or price is going up. This is a example of 5-minute chart out of bit, but this is old already. So I'm just applying here to an actual situation, so the current situation, sorry. Okay, so we'll go to the session of Tuesday, which was the one I liked the most of the week. I'm not gonna lie, I like the most of the one on Monday because I lean bearish for the future. Like, I expect these conditions to keep being like they are right now, so not really expecting on any sort of improvement, any sort of nothing. So we got on Tuesday, we got first part of the day, we got flat price, flat everything, and then it seems we triggered some long liquidations here. And as you can observe, you had a really small OI candle down and many liquidations compared to other ones here. So I think that's a sign that it is a sign that it was all liquidations. Like, no longs were manually closed or stopped out. There was all liquidations. It hit an interesting level, and from there it was a grind up. It was bought, which if you look here, it caught up with futures, which is definitely a good sign. Like, if I was at 26.5, I would long here because spot is buying, spot is doing the thing. I would not fade spot. And then we have the typical just shorts, longs opening, shorts getting liquidated and adding more fuel to the move up. Have stagnant OI again. Shorts give more fuel. Short liquidated. Short liquidated is a long, because to short you have to sell, and to close the short you have to buy. That's the core principle. And then we just continue the session like that, although it was mostly driven by liquidations. I didn't see a considerable OI growth at any point. So I just say it was mostly liquidations. It was not really new shorts opening, although there obviously were new shorts opening. New longs, sorry. There were new longs opening, but there were more shorts liquidated during the run-up. Like, you could switch to the 1 minute maybe and see properly how that behaved. But there's no need to do that right now, because I'm not trying to analyze 1 minute chart of something that happened 2 days ago. And then on Monday we have the Binance SEC FUD. What's my opinion about it? Probably neutral. You know, they've been going in circles with the SEC for years, I guess. Doesn't really represent anything that they said X and Y tokens are securities. I don't think so. So yeah, just go with the start of the day. We see spot considerably selling more. That's a bad sign already. And you see, you know, difference with this, for example, and you know the Tuesday session here after price was going up or Y stagnant. On Monday, price was slightly going down, but OI was increasing a lot. So that just meant that shorts were trying to push for long liquidations, and they did it perfectly. But that was not something that had to do with the actual order flow. That had to do with the news. But the order flow aligns suddenly. We had a ton of liquidations here. And then after the liquidations, we had a period in which shorts were trying to push for it again. So you see most shorts open here and got liquidated on the way up. These ones probably closed, but the ones opening here were the ones which got fucked in the Tuesday session on the run up to 27.4. And the end of the day was pretty stagnant overall. So this concludes this week in order flow. I wanted to do another episode, but I decided to include it in the live stream, so I could even reference it later this week and just say, like, if prices goes to 25 or 20 high 24k, I could just say I was right, to claim some clout, of course. And we still have 3 viewers. Okay. So yeah, just I don't know. Just have 3 viewers. It's kind of sad, and looks like I'm talking to myself, but at least I know, and maybe those you 3 will gain some knowledge. So I'll now go with my high timeframe TA. I don't do TA anymore. I'm just plotting a few lines based on volume profile. That's all I do on TradingView. I just open CONSTITUTE, I open CME, I open Deribit, and use my brain a bit instead of opening TradingView and drawing lines here and there. So you know how my trading style has evolved. It's mostly CONSTITUTE because it's way more accurate, and you can get way more conclusions than TradingView. And of course, if I had like level 3 data. Okay, so yeah, this is my high time frame chart. You see naked POCs. In case you don't know what a naked POC is, I'll just explain it real quick. So you take a session. I take sessions with the volume profile. This is the volume profile indicator, the one right here. I don't have premium, I'm poor. So you just take a session. Just imagine this is a session. Bruh. It's not updating. Wait a second. So you take volume profile of a section, and just imagine you took volume profile of this section here, and you have the POC, which is the point of control, the zone, the price at which the most volume happened, and then we have the value area, which is 70% of the total volume in the least amount of space. So that's the value area. The 70% number actually comes from 1 STD from the POC, like 1 standard deviation. But I won't get too much into details with that, as I want to record a video about volume profile probably the next one I'll do. So yeah, again, we have the POC and we have the value areas on the volume profile. So just imagine you plot this and this is a session and you have the POC here and it doesn't touch anymore. It doesn't touch, you know, you have price here and POC here, up here at 23 and price is at 22.5. That's a naked POC automatically and until it hits. So price hits here, the POC again, and March the 13th. That's not a naked POC anymore. But just imagine you apply this on a daily session, and it works way better than applying it to a random range or something. So I have a naked POC at 33k, and I have a naked POC at 22.3. Not that I deem it really relevant, but just in case. The next level I have plotted is the one on daily. So it's just a high at 25.2 here that happened in August last year, and the same that got respected on February 21st. Again, I don't really like drawing support and resistance. You could say that you're bullish based on this line alone, but my reasons just make me think that it's gonna get worse before it gets better, and it's definitely not looking like we should go up. And I have personally not bought anything at 25. I'll be waiting for 24 or even like high 23k to buy something. I'm like 60%, like 30% BTC, 30% Ethereum, and 40% cash. Yeah, something like that, approximately. So yeah, I'll be waiting for this value area to get hit. So the value area of this range, especially if 25.2 is broken, of course. If not, we'll probably see a range. I will not be interested in buying, and I will just sell at 34 to 36. These two naked POCs here. That will be my main selling zone, of course. Until then, I'm just spot chilling, taking low timeframe trades if I can, based on order flow. And that's mainly my strat. That's why I don't do TA anymore, like I used to, like 1 year ago maybe. It's changed a lot. Especially since social media is not market making anymore. TA just makes no sense. Not like it ever made, but you know, Alameda gave it some magic to plot some MAs, some fibs, some whatever. I also plot anchor VWAPs, by the way, but it looks like training view is not working. I wish it was. Let me just refresh, and maybe it works. Okay, so you can plot a VWAP, an anchor VWAP. You know, if you go here and select search low, when you anchor to lows, that's something I have commented on my VWAP video, which is the last one I have on my channel. And as you see here, we had one test, two tests, and finally a break from the VWAP. So that's a point in favor, another point in favor for going to 24, 23, in my opinion. Anchoring VWAP to strong lows or highs is really effective, in my opinion, really reliable. And in case you don't know what VWAP is, it's like a volume average, moving average that takes into account volume. But again, I recommend you to watch my VWAP video. Next up, we have just seeing if anyone asked anything. Please ask me your questions if you have any. I'll be pleased to answer them. Any kind of opinions, any kind of feedback, you know, I will highly appreciate that. So it seems no one is gonna ask anything. So I guess it's about time to finish this stream. Oh, I just wait a few more minutes in case anyone wants to say anything, but I don't think so. Just conclude with again, follow me on Twitter, subscribe to this YouTube channel. Yeah. I guess see you in the next video. See you in the next stream. I'll be preparing more streams for you. Something bigger coming than this. So I really hope you subscribe. You follow me on Twitter again.